The dollar versus yen has moved sharply to the downside and trading here today. That move to the downside was started in the Asian session, some consolidation in the European session, and continuing to the downside in the U.S., early U.S. session. We're heading toward a key support level. I'll talk about that in this video, so let's get started. Looking at the price action yesterday, we saw that it's up and down price action. After the FOMC rate decision, the price started to get, or tried to get above the 100-hour moving average. That's the blue line in this chart. It was successful in doing that, moving higher, but could not get above the 200-hour moving average. That's a green line in this chart. And as you can see, it was quickly reversed to the downside with the resistance holding against the 100-hour moving average in the early Asian session. That rotation helped to push the price lower toward the next target. The next target was at this swing area. The swing area is defined by a number of different swing lows and swing highs going all the way back to here into mid-December. And then it was continued through here. We broke below it here and then broke back above it here, using that level as support through in trading this week. Also, the 38.2% retracement it comes in at that level. That's of the move up from the December low to the January high. All that area comes between 154.77, 154.967. And as you can see, when the price fell below that level right here, we saw increased momentum to the downside. We use that level as resistance on the corrective move higher right here, keeping the bias more to the downside. In early U.S. trading, we've seen a rotation further to the downside. Now that move to the downside, this last move to the downside, has gotten price closer to the 50% midpoint of that same move up from the December low to the January high. That 50% retracement was the bottom on Monday's trade when the markets, the dollar versus yen, moved sharply lower on the tumbling in the U.S. stock market, and that level is now being reached, or has been approached again in trading here today. This is going to be a key level for buyers and sellers, not only today, but going forward. If the price were to move below that level, I would expect further selling momentum to the downside with this swing area as the next key target. Then we'll look toward the 200-day moving average, which comes in at 152.818. Now, having said that, this area is so far holding support. We had early buyers against a level. That makes sense. Why? Because risk can be defined and limited against 50% retracement. If you buy here in the 80s with a stop below the 70s, you're not really risking a lot on that trade. And we have seen a rotation back above the 154 level to 154.10. So far, the big selling pressure in the dollar versus yen is, but as you get lower, you get those buyers coming in against key support levels, and that's a key support level. What would turn the bias around? Well, this level up here at 154.47 would probably need to be broken to increase to give the sellers some cause for pause. That level was defined by this swing high right here. We broke above it right here and used that level as a base to move it to the upside right there. In trading on Monday, the price did try to stall against that level initially before breaking below, and then we based against it right here before moving higher. So it has some history, recent history this week. Admittedly, in trading here today, the price came down toward that level, traded above and below it during most of the European session before breaking to the downside. So watch that level, 154.47. That will be a key barometer that may turn the bias back to the upside if the buyers can get above that level. So strong support of 50% retracement. Resistance up here at 154.47. We're trading in between that level at 154.10 at the moment. My name is Greg McCloskey. Good fortune to trading. Bye-bye now.